Exchange traded products and leveraged shares are really popular on Trading 212 right now. They look really tempting to try and magnify some of your returns. But are they that good? Let's discuss if they're the real deal or not.
I'm amazed how many people own stocks. I'm amazed how many people own stocks.
Welcome back everyone, my
Sucker's
name's
going
Paul. I'm brand new to investing, I have no financial qualifications whatsoever, and I started a dividend reinvestment portfolio on Trading 212. I'm not qualified in any way to tell you what to do, and I'm not going to try, trust me. But this channel is all about me trying to invest into the stock market, learning as much as I can, and trying to show you that you don't need to be a qualified financial advisor in order to make money in the stock market. Each week I discuss something new that I've learned and try to display it to camera because that's the way it goes into my head. And I take in all of that information and try and apply it to my own portfolio. I'm sticking to this dividend reinvestment portfolio for at least 3 years. I'm hoping as long as 5 years. And if it's still working after 5 years, I'll be carrying on to 10, 20, or even 30 years. Right now, I'm not doing that bad. My portfolio currently sits at 31,954. And in Trading 212, you can set up your investments into pies. Now, I'm not going to properly do this until they start creating pies within pies. But up until now, what I've done is I've created one pie, which I call my income pie. And my second pie is called the S&P 500. And this second pie simply has one holding. And every week or month, 5% of my deposits go into this pie in the S&P 500. And everything else that I deposit goes into my income pie. This for me is a very simple way of me tracking my progress against the S&P 500. I don't sell anything in the S&P 500. I only sell and buy things in the income pie. And what's a bit scary is today is the first time that my pie is behind the S&P 500. The S&P 500 is currently showing at 12.94 and my income pie is showing at 11.57%. Ouch. It's a shame because my time weighted return has pretty much always been above the S&P 500 kind of since I started. But because I bought and sold some of the stocks and loads of dividends go into this portfolio as well, the actual time weighted return is not a good reflection of what my actual return is. What I should be looking at is a money weighted return, and on a money weighted return calculation, we actually find that I'm 14.8% up. I've never actually set out to beat the market as such, but I always do want to check myself against a benchmark, so I've chosen the S&P 500. Really, all I want to do is beat inflation, which is about 2%, or at least I want to beat a bank account. And while I've chosen a dividend growth strategy, which may or may not stand up in the future, many others, including many of you watching, have probably chosen a different strategy. You're probably very into your growth stocks. And some of the biggest growth stocks right now, many of the Chinese stocks, aren't available in a UK ISA. And there's good reason for that. So the other day when I saw on Instagram that Trading 212 were now allowing stocks like Baidu and Pinduoduo and Sea Limited and Neo into an ISA, my first thought wasn't, oh, great stuff. It was actually, okay, how? And who's getting fucked? Because there's a reason why you can't buy Chinese stocks in an ISA, and if you've seen this channel before, you probably already know why. But the HMRC only allows companies to be in an ISA if they come from a country with a recognized stock exchange. And China's Shanghai exchange isn't one of them. And when you have a search for NEO on Trading 212, you realize that it's actually an ETP that they're selling and not the proper stock. ETPs are exchange traded products and not too different from ETFs, which are exchange traded funds. And seriously, there isn't that much difference. And if Vanguard can put NEO into its all world ETF, and I'm sure it does have NEO in its all world ETF somewhere, then these guys leverage shares can put NEO into their own exchange traded products. And if they've got this loophole, it makes this entire HMRC law absolutely useless. As long as these exchange traded products have a recognized KID document, a key information document, then they're simply able to apply you with any product with any high risk score. Leveraged ETFs and ETPs aren't anything new on Trading 212. They've been around for quite a while with Granite shares, but this leveraged shares company seems to be quite a new one. And it looks great. Leveraged shares have two types of ETPs. They have the short and leveraged ETP, and they also have the stock tracker ETPs, which look pretty new. These ETPs are designed to be held for the long term and give you exposure to areas that you might not be allowed to have exposure to. But you're buying these products from a company that's literally called Leveraged Shares. Trade with more conviction. Because on one side, they are trying to get you in with the little stock tracker. They really want you on the short and leveraged. Some examples of how these ETPs should be used include responding to technical indicators on individual stocks, trading the volatility, positioning or responding to earnings and news announcements, and reacting to overnight movements in foreign markets. Basically speculation and trading. And wherever there is speculation and trading inside investments, the odds are almost always against you. For a start, on the 1x tracker shares, there is a fee and it's not very well advertised. Of course, you will find it in the KID document, and you should be reading any KID document before you get into any ETF or ETP. But it's not very well advertised, and I really can't see any reason why you would want to buy Airbnb, Palantir, or Plug Power within an ETP.
Here at Leverage Shares, we believe in removing barriers for investors and leveling the playing field. And here's how the trackers do just that. First, they are priced at a fraction of the stocks that you're tracking. Names like Tesla and Amazon have never been more accessible.
If that's the case that they're lowering barriers to entry, then why are they trying to trade on Trading 212, which already offers fractional shares? Why are they creating fractional shares in Airbnb and Palantir and Amazon? It doesn't make sense.
The pandemic brought about a fundamental change to retail investing. Not only are more people involved in stock markets today than ever before, but they're also younger
And dumber.
and more autonomous in the investment decisions that they make. However, they're also more cash-strapped.
And desperate, because this is where the crux of the matter is, and this is what I don't like about these parts of investing. Charlie Munger went on record again to say that Robinhood was just a gambling parlor. And this is because Robinhood doesn't try and get you to buy into an ETF and hold for the long term. What it does is it tries to get you to trade options. I'd be worried here that leverage shares, leverage shares, that's the name of the company, is trying to actually get you in with their stock trackers and then try and take you more risk by taking on more margin and getting into the volatility. They charge much more for these short and leverage positions, and also charge overnight fees and even reset the leverage every single day.
Second, investors no longer have to foot the bill for foreign exchange conversions. The stock tracker ETPs allow you to buy in your preferred currency.
And just because you're buying these ETPs in your currency, it doesn't mean that you're avoiding currency risk. Leverage shares are buying the same underlying asset from abroad, and they're just passing on the costs and the profit onto you. The difference is you just don't see it. So if you really are that desperate to have NEO in an ISA, then just remember that you are subject to currency conversion problems. You just don't know it. And remember that there are fees built into these ETPs. You may just be better buying NEO in an invest account. And please be very, very cautious about the Granite shares and the leverage shares 3Xs, because they're not designed to be held for more than a day. All of the leverage resets at the end of the day, and any gains that you've previously made is not correlated with the underlying asset anymore. Leverage shares even have to compare themselves to OTC products and CFDs because they are so similar. You can lose a lot on margin. Ultimately, though, this is your decision. Just please try to have a really good understanding of what you're buying when you're looking at these securities. Personally, I do not like them. I do not like that these securities are simply CFDs or margin traded products just in disguise that you can put in your ISA. And I don't think that that is made clear enough, especially on Trading 212. Thank you very much for watching. The investment app that I use is called Trading 212. If you wanted to get into investing and maybe follow a similar strategy to what I do, you can find my portfolio in a link in the description below. If you click on that link, you can see my entire portfolio and you can see how I try to weight all of the companies within my portfolio. Feel free to check me out on Instagram. You can see all of the things that I'm buying recently, like my recent purchase of Ethereum for $100. That's basically my last crypto purchase that I'm going to make probably for the rest of the year now. Thank you very much for watching, everyone, and if you enjoyed this video, please feel free to like, subscribe, and invest.
I'm amazed how many people own stocks. I'm amazed how many people own stocks. The sucker's going up.